What's up, guys? Welcome to another live session. Today is September 8th, 2019, and we have some movement in the markets, some concise movement. So I finally called my first signal of the week, and it is a EURUSD short. Now, yesterday we were looking for potentially going long on the euro. The only basis of going long was if we did get a break outside of a descending channel. And we were inching up higher to do that, but we didn't get that break, and so the more likely setup was the short. So as you can see, in the last few hours, the euro has dropped considerably, considering it's been in this trading range from 1.09630 to 1.09950, so a 30 pip trading range, and it's finally a nice bearish closure outside of that. Right now we're at entry. We might have a pullback before going lower, so don't worry about the drawdown. In other instances, the pullback could be small like this one, and then we go down lower. If you look to the left, euro has a tendency to just keep dropping at times with very little pullbacks. So it just depends. A lot of fundamental stuff is going on. So China and the U.S. are expected to meet in 3 days to talk about the trade war. But what Trump did was he threw a curveball against everyone. And let me actually get the article. U.S. blacklists 28 Chinese entities in trade war escalation. So basically has blocked Chinese technology companies from buying U.S.-made goods, alleged human rights abuses in, I don't even know how to pronounce this, but basically they have about 1 million plus Muslims in like concentration camps, however you pronounce this, and so obviously that's a UN violation. So the U.S. blacklisted 28 companies, tech companies, in retaliation until they do something about this. So obviously it was looking like they were gonna make a deal, or at least do some talks, and that's better than not talking. But Trump said, nah, screw that, we're gonna rustle up the markets. So that happened, and yesterday US and Japan reached a deal. It was, I believe it was a tech deal as well, or maybe even a media deal, but it definitely moved gold. Let me see if Daily Effects has an article. If not, we can Google it. So let's see. These rumors is pretty good. So a lot of unexpected stuff. Obviously, this is not on Forex Factory, so it's hard to predict. But aims to put U.S. farmers on par with Trans-Pacific trade-packed competitors. And let me just try to find something to summarize this deal. Okay, so the U.S. Trade Representative said the pact would immediately eliminate Japan's tariffs on U.S. food and agriculture imports valued at $1.3 billion per year, including almonds. An additional $3 billion worth of products would benefit from staged tariff elimination. So I guess Japan has limited tariffs on U.S. goods, so obviously that's good for the dollar, and that's why we saw the gold melt yesterday. So euro, we're potentially gonna go lower, hopefully so. Gold, yesterday we were looking at longs. We didn't get our criteria, so if we look at it, a funny thing happened actually. So during the live stream, we were here, and I told you guys this candle, if we could flick up, we can go long. Obviously, it flicked down, and I did say that if we do, come down and we break 1496, we could go lower to 1488, and that happened pretty much to a T. So this is the thing about gold. It respects the key levels. It dropped our previous support at 1496, and it went right pretty much to the pip of our next line of key level, and it rebounded. And I think at this point is when the Japan trade deal came out, and obviously this is a pretty bearish candle, very little wick to the bottom or the top. We came down back to our support 1488 and rebounded. And our original long idea discussed yesterday, you can see what happened here is what we wanted here, but we didn't get that. But if you look what happened, we did get that closure above this level, and it was a bearish closure. And we did get our move pretty much to our final take profit. So pretty clean technicals happening. That's the case after NFP week, where there's a lot less noise. So whoever caught this setup, nice amount of pips bagged here. 80 pips here. And if you had this long setup kept on your charts, you could have captured this move as well. So pretty simple and good stuff on gold on a Monday. We're looking for shorts for EURUSD. Also, Aussie CAD has a nice potential short coming up for us. And if we go to, I guess the 4 hour will show this pretty nicely. It's panning out. We can see extending this over and extending this over. Hopefully you guys can see the trading range that Aussie CAD is in. Usually from this zone to this zone. And price has slipped below, and this blue line right here is our last bit of support at 0.88800. And if we look in recent times, we've tried to make a rally to this previous resistance zone, but sellers have pulled back. The CAD's doing pretty good. I think this Friday has its unemployment data, but if you look, it's pulled back and came up to retest the secondary support in our range. We look to the left, we do have a trading range from here to here, so that's going to be one of our take profit levels for our swing trade when we swing trade Aussie as a sell. And it's at a pretty good spot to enter, at least the 4 hour says so. We can do something like this, pretty tight stop. The stop is going to be around, that's a really tight stop. It's going to be 20 pip stop. And then, yeah, you can have a take profit all the way down here around 80 or so, 90 or so pips away. So let me just look at the 1 hour before I tell you guys to enter. Yeah, it's a good spot to enter. Go ahead, guys. Entry is now for Aussie CAD shorts. And I think this is a good spot for our stop loss. So a 40 pip stop. First take profit is probably looking to the left. It's probably gonna be right around here. So guess it could be here. So first take profit's gonna be around 20 pips away. It is Aussie CAD, so it obviously moves less per pip, but that's gonna be your first take profit. Just because it's our last swing low here, and multiple wicks through this region. Even though it's a 20 pip take profit, I don't want us to get greedy to go to 25 pips. We usually get just to get stopped out. So first take profit's gonna be 20 pips away, and then after that we can probably tackle 0.89231, so that's 30 pips away, and to ride it down. But a decent setup, and the stop loss is only 30 pips, so I'm not too worried about overly exposing us, because we are in EURUSD. But yeah, that's what we're gonna go for. This in EURUSD, pretty good setup. Another setup I was looking at was pound dollar. So the pound, I believe it's gonna stick to a no-deal Brexit. So the European Union is not gonna give the UK what it wants, and for us that's gonna be great. If we look, our previous level 122,400 has come into play. We've broken that, and looking to the left, whenever we've broken that level, we have gone lower, considerably lower, multiple times. All we have to do is be cautious here, is because we do have wicks. In previous times we did have wicks here but no closures, and because of those wicks there was a lot of bear traps and fake outs, right? On this case we did have that full bearish closure below this level, and if we want, we can actually adjust it to the recent support we've created. So right now price is probably going to retest, retrace to retest somewhere around this level, and if we get that rejection, we're going down. Considerable lows can be made, and you know what, when the no deal Brexit news comes out and we're in this trade, we could benefit from the volatility where the pound just falls out of the sky. Because if we look this point in time right here, and this was in the beginning of September, the pound made its all-time lows, record lows. So let's not forget that. This is a place we can target when we go short. But if pound gets a no-deal Brexit, that's going to be a burden on the UK economy, and we could literally fall out of the sky and go down somewhere here to even lower to make new lows. So that's the bias. Pound USD short and Euro USD shorts are going to coincide. Obviously, the 4-hour candle is looking like it's going to retrace a bit. And I actually love these type of setups because the best entry, let me remove this to make it clear, the best entry for when you have a nice significant move, and we talked about this in yesterday's session where we were talking about this bearish pennant pattern where price is getting squeezed. Whoa. You guys should know this by now. And I told you guys from here we can either flick up and do a breakout, or we can come down here and just slip out, fall out, and that's what happened. And actually, if we look on a smaller time frame, when we did get that break, we did come up to retest, and I kind of rejected it. So the best way to get entry when you have a significant move and just a lot of wicks, you're pretty much creating support on a smaller time frame. And we look into the left, we can see the last time we did have that fallout on the pound was somewhere here, and we're gonna put our horizontal ray. Hopefully this makes sense. I'm not going too quick. But if we look, the last time we got that closure outside of our support, it was here, and this is at the point where we rebounded. If we look to the current price action, this is where our shorts have stalled. So the best way to get a great entry and to confirm we're going down lower is waiting for a closure below this level. I would not use a sell stop, because if you did, you could easily get wicked out. So for example, price can wick down here and then go back up. We're gonna wait for that closure below 120, so 122,000. That's what we're gonna wait for, a closure below 122,000. And Lord have mercy, because we're about to go low. We're about to go low for pound dollar. So hopefully that makes intuitive sense to you guys. Monday I didn't really call any trades other than that gold one, but this is what we're gonna have in terms of an actual signal call and a potential move down. Just wait for that nice closure, and I'll let you guys know when to enter this. I'll keep track of this. I'll have an alert because we don't want a closure like this, for example. We don't want a hammer closure. We don't want any of that. We don't want a shooting star. I mean, we do want a shooting star if we get to that point, but we don't want a hammer like this or indecision candle like this one. Type of candle we want is a bearish candle like this. Looking to the left, something like this would be ideal. Something like this would be ideal. Just a significant break of that level would be the best way to go. And when I mean break, I mean on the hourly. That's gonna be good confirm to go lower. So 3 solid setups, and what do you know? They're all shorts. Euro USD short, Pound USD short, Aussie CAD short. 3 trades for a Tuesday. Let's get to it. Fundamentals. Powell is speaking at 1:50 today, so in less than 2 hours. Be careful about that. Hopefully the moves benefit us. Tomorrow we do have Euro group meetings. I think they're going to be talking about what the hell is going to go on, because they've been quantitative easing for about a year now. Then you have obviously crude oil inventories. So for those that trade crude oil, we'll look at that on the charts before we head out. And Powell is speaking at 11 a.m. tomorrow. So tomorrow's going to be a pretty crazy day because we have FOMC meetings as well. So tomorrow morning's going to be pretty crazy, especially when we go live at 11 a.m. It's going to be pretty intense. We might just go live and just see what happens and what Powell says before we start analyzing anything, because all he has to say is one sentence, and our analysis off the charts. So let me just take a peek at the chat real quick. Our beautiful portal. if anything, doesn't work or doesn't load, just refresh the page and you're good to go. But yeah, this recent trade war has really messed up these previous quarters of trading. What's up, guys? So let's look at crude oil. If anyone has any pair recommendations, Anna, Jared, let me know, and we will end the session off right, and hopefully we end the day off in profit. So let's look at crude. Oh man. Potential buy setup. This is a nice buy setup actually for crude oil. I don't think this was the chart we used last time though, or was it? Was it? It just might be. Okay. Well, last time we shorted crude oil from one of these points. Beautiful resistance zone right here. Let's look on the. That's weird. It won't let me. Cool. Yeah. So this is a pretty decent support zone we have here. This blue region. And if you're looking for a precise value, trying to get it, 51.52 per barrel. If we look, it's been a nice resistance. We can see clear wicks to that price point, clear wicks there, clear wicks here, clear wicks here. And then as recent as this year, start of this year, January, we've used it as a support in our rallies. So we had a rally here, we had a rally here, we had a rally here. Could we have a rally again? So looking at the crude oil inventories, we're expected to have 1.8 million barrels. Previous was 3.1, and I think the reason why crude came down so much was that attack on the Saudi plant. Where we lost 5% of the world's oil reserves. So maybe if tomorrow's crude oil inventories comes out better than expected, we could have a long. Because if we look, you can see the long setup from this region, and the only thing about this one is when we did have that previous attempt to go long, we printed a shooting star on the daily. So it's not too convincing. Obviously, if we were here at this candle, I would go long, but since we tried to go higher and we printed a shooting star, this setup is not as probable, because in the left, when we did have a bullish candle printed on the support region, we did rally. Bullish candle, we did rally. So that's what we have to watch out for. And the case I'm talking about is when we had a bullish candle, we printed a shooting star, whatever you want to call it, we dropped back down. So we're gonna be cautious here, but depending on what Powell says, this could all change. But this is the long setup we could potentially have. And obviously crude oil at 2.52 is pretty good. It could double your account really, even if you use mediocre risk management. But yeah, I mean right now we are coming back from this rally to this rally. We are coming back up, so the potential to go long is there, and we can actually clean up the long setup a bit. You can see we've kind of created a resistance here. So a bounce, snap back, snap back, snap back, resistance, snap back. So you can see this level right here, 52.90, has been a pretty decent resistance. So what we want to look for is a break above. So we'll put this right here, and I'll show you guys what I mean. Get the arrow out. So we want to break above, a retest with a bearish candle, and a rejection. And that rejection has to close above the previous wick of that initial break. So if we look at this previous example, this is a classic fake out for those that went long. Okay, you had the push, the retest on this red candle. We did not have that rejection. And what a valid rejection is a candle that closes above this previous highs right here. So in this case, we wanted a bearish candle to close above 53.29. So hopefully that makes sense. and that makes our stop a lot tighter for this setup if we do go long. So crude oil, a long setup. Let me go back to the daily so you can get your levels down. But this could happen, and it all depends on what Powell says and tomorrow's inventory. So yeah, we covered some solid setups. We don't want to overtrade. If anything comes into mind later in the day, I'll let you guys know. We have pending pound dollar. Currently we're in EURUSD and Aussie CAD. So Aussie yen, nice 2-7. Just need to wait for that pound. Yep, Aussie yen, yeah, cool. Last time I checked, Aussie yen was rallying, and then it printed a shooting star on the 1 hour, I think. So, oh, ugly price action, damn it. Jeez, this whole trade fiasco really made things ugly on the charts. I have to go all the way to the monthly to get an idea. It looks like we're going lower. I mean, wow. I'm just surprised by the recent price action because it's pretty ugly here. This was when I think the Saudi attack happened, and since then we've dropped, came back up. I think the pound and the Aussie is gonna really crumble against the yen. It's gonna act as a major safe haven. So that new deal that Japan got with the U.S. is gonna make the yen stronger, and obviously this is gonna make the yen act as a safe haven again, because this U.S.-China trade war is ongoing. Who knows, in 3 days, U.S. and China could, shake hands and end this whole fiasco. But in terms of fundamentals and even technicals, I think we're going to go lower. The only thing to watch out for before we go lower, we take any shorts, is a break below 71.90, 71.900. And ideally, a break and a retest, because we previously did have that break. We didn't get that retest rejection. And I know I'm beating a dead horse, but that retest rejection is going to make sure you don't get faked out, for example, here. So, yeah, we can go lower, and I think by now, Jared, you think I know where we'll go to if we get the break, retest, rejection. Break, retest, rejection, it'll be somewhere down here. This would be a nice place to target, 2.18. Pretty decent. You can even move this down lower because you can see these wicks coming down now lower. But yeah, fundamentals and technicals say a weaker Aussie. The Aussie has already cut their rates a few times already. I think they're looking to keep it that way. Australia's biggest trade partner is China. When China struggles, the Australian dollar is going to struggle. And so as long as this trade war goes on, we should see, a break below 71.900 to go lower. Let me know if that's what you see. Obviously, wait for that break, retest, rejection, so you don't get faked out. But things are looking down. Pardon me. The Dow Jones, S&P 500, everything is down. This trade war is pretty much to blame, and yeah, so tensions are rising pretty high geopolitically with the whole stuff that's happening in China with the concentration camps. But yeah, so another great session. We're going to let our trades play out and see what happens. Who knows? Tomorrow, if we do get that closure, we can enter Aussie yen short as well and be beneficiaries of the yen. So pretty good session. I think we covered a lot today. Monday was pretty lax and pretty slow. Good to be in some trades, just because we're addicted to trading. We always got to be in a trade, and that's great. So we'll see how these trades play out. I'll see you guys once again tomorrow at 11 a.m. Eastern. And tomorrow is gonna be crazy when we go live. So we're gonna have crude oil, which is already gonna rocket the markets, and then we have Powell speaking right when we go live. So pretty crazy day. It's going to be volatility. That's where we trade this market. As always, we want to be on the right side of it. So I'm RP Forex. I'm logging off. Thanks for participating in the chat once again, guys. And yeah, I'll see you guys tomorrow. And let's secure some profits. So peace. And I'll see you guys tomorrow. And hopefully we are in profit then.